Bushels and Beef Farm Tour and Podcast, where producers talk markets, share stories, and cut through the noise in agriculture.
Welcome back to the Bushels and Beef Podcast. I'm Nick. Today's podcast is sponsored by Logic Ag Marketing. Logic Ag Marketing helps farmers and ranchers manage their risk, offering full-service brokerage along with LRP, crop, and PRF insurances. They even serve the entire United States. Today's guest is Dan Gerhold, one of the fine owners of Logic Ag Marketing, livestock advisor, commodities broker, and he's Benton County's #1 ribeye consumer. Dan's been watching cattle markets closely, and he's got some thoughts on what's happening right now. From Friday's freakout sell-off to why feed yards are pricing themselves into losing hands, to why someone out there loves ribeye steaks even more than he does. So with that, Dan, welcome to the show.
Quite the intro, Nick. Thank you. Yeah.
Of course.
If that's my world's biggest accomplishment I'm known for, I'm a happy man.
I mean,
absolutely.
You had to have had a ribeye for lunch, right? Maybe, if you could afford it.
I did not. Nope, not today, but I will do what I can to make sure that one is consumed this week. Write it down.
Yep, we got it here right on the video. So,
yes, sir. Yeah.
Before we dive into cattle markets, let's just talk about real life for a moment here. We're in the new year. We got through the holidays, but what's a moment from the last week or two, either on the farm or in the markets, that had you rolling your eyes or shaking your head in disbelief?
Oh, man, there's been a lot of little stuff happening, I guess. You know, the weather has certainly been temperamental. We've had some flash blizzards in our area. Not a lot of snow, but plenty of wind to go with a little bit of snow turns it into a blizzard fast.
Yeah. I saw quite a lot of footage yesterday, actually, of it looked like the old Dust Bowl photos, but it was just snow out in the distance.
It's Mother Nature is certainly bringing winter on hard here at this week for sure. Yeah, besides the weather, I mean, markets have been realistically range bound, haven't really done much. I mean, a lot of sideways action. Let's hope the old rule of thumb lives on, but we're going to find out. It's got a nice pop in the hog market, so that's always good.
Yeah, I saw that in the newsletter yesterday. Do you want to touch on that a little bit?
You bet. Yeah, been really optimistic the hog market for quite a while. Just the price of beef overall, I think has helped stabilize this hog market up here. You know, keep that cutout propped up above $80-85 and above here. We've been trending in this, low to mid 90s on the cutout side. Cash has been a little disappointing given we were expecting a hole here in December and coming into January. But overall, exports, we make a lot of pork in this country. Some would say we make a little bit too much, but if the exports are there for us, I think it's a good thing. So we've had some decent exports. It's been able to support that hog market through the holidays and into January. Actually starting to see a little bit, some concerning signs for the first time. I'm actually writing up in the newsletter right now that, price always matters when it comes to these markets. You can be bullish. You don't want to be a long-term, forever perma-bull or perma-bear. It always comes down to price. So, when the cutout's, sub 90, and beef is, above 300, it's easy for me to get bullish hogs and the cutout. Now all of a sudden you got the hog, got that pork cutout up in the mid 90s, and it seems like we're struggling to move the same amount of loads. So get a little bit on edge. Stepped in, sold a few contracts today. Had a gap higher that we did not close on the high following. A little bit concerned with that. Maybe see a short-term pullback before we go into our summer run. Feel like we should protect here for a little bit, but of course this is not a solicitation for everybody to go out and sell hog futures. But it's been a strong market, super strong. In fact, that it wouldn't surprise me if we see a little correction and then see what this overall protein space does here coming into March and April. So I can get optimistic for the summer pretty easy. If we just get a little cool down period here, end of January into February.
Yeah, speaking of proteins in the new year, with the new food guidelines out, did you see that kind of shake up the market, or how has that kind of influenced some of the movement in the market and overall consumers right now?
Coming from a guy who was the one made fun of in his family, early on because I was, full-blown carnivore or tried to be full-blown carnivore, and a lot of people thought I was going to die or get scurvy. Caught a lot of flack from that, and it's amazing how many of my family and family members, friends have come around to the idea. So it was really encouraging that finally our health department, our government came out and said, hey, more proteins, less grains. Not knocking the grain side of things, but overall there's a lot of proof showing that we need to eat more and higher protein level type diets. So I was super, super pumped about that. As always, I think they're a day late and a dollar short because this started, post-COVID when it really got ramped up. People stayed home, they grilled, they found out that it's a lot healthier and we need those, some of those good fats. So as always, I'm going to celebrate the fact that they finally changed that food pyramid. I just think it's like, come on, this has been going on for 5 years. Wake up, So I'm certainly supportive of it, and I don't want to be a pessimist, but at the same time, it's a good thing. I'm happy the government recognizes it. I'm hoping that because they did that, they can change some of these school lunch programs, especially. Obviously, we're not going to serve ribeye steaks to my kids at school, and they better not. But
if you're getting leftovers and they're getting ribeyes,
I know there's
that's
something
gonna
wrong.
go backwards.
I'm going to go back to school, I guess. So, but overall, I think it'd be good for the kids, health-wise. I think long-term health benefits are huge. So let's start them out young. They get these dietary programs straightened out and get them moved into the schools and into hospitals and nursing homes and, everywhere the government's involved. I think it'd be a great thing. So super pumped as far as seeing stuff in the market. Like I said, day late, dollar short.
Yeah, we've talked about this too in the past, and whether it's the markets or even some search trends that we've looked at in the past from Google side, like carnivore diet, high protein, like you said, in the last 5 years they've all been going up, and especially this time of year, new year, new me mentality. Let's get on a diet. Let's try out something new, and anticipating that this protein diet will stick around even all the way through the summer too. So I should keep the pocketbooks open and the grills going too.
If you remember back in the day, there was a thing called the Atkins diet, and that was not named after my hometown, but the Atkins diet was very similar to the keto diet, just a lot of protein, a lot less carbs, and trying to remember if it was Oprah that derailed that diet or if it was the pink slime story. One of those two deals derailed. Oh, I wish I remembered off the top of my, yeah, what a joke. But one of those deals derailed that Atkins diet. And I'm really, really hoping that nothing derails this and it's more than just a trend or a fad. So let's hope we can hold on to it. We've seen a lot more health benefits out of it than we ever dreamed of. So it's pretty cool. It's helping with diabetes, dementia, stuff like that. It's awesome. Just wish they'd push it even harder than they are.
Yep. Pair it with a glass of whole milk from the local dairy, and that is a solid meal there.
Don't forget your salt. That's all I need. Yeah, absolutely. I love it.
Man. Let's talk a little bit about markets. Last Friday, the market dropped nearly limit down, and you said it was triggered by one guy fear-mongering on social media. What happened there, and if you want to dive into that a little bit.
I believe his name was Sid Miller. Sorry if I'm wrong. Sorry, Sid Miller, for throwing you under the bus, but keep your mouth shut, would you? I mean, you come out, get a platform, and all of a sudden tell us a bunch of shit we already knew. What's the point? Mm-hmm. So, long story short, it's concerning that something like that would trigger that large of a sell-off. That shows me how fragile our market is at these levels, so that's definitely concerning. At the end of the day, like I said, he didn't give us any groundbreaking news. Most of us in the industry are of the opinion that eventually the screwworm could hit the U.S. Most of us are of the opinion the screwworm is obviously, it's an insect, it's a fly. If you see one, there's millions and billions of them. So it's not groundbreaking that it's 200 miles or 20 miles away from the border. It is what it is. It's an insect, that reproduces fast. So at the end of the day, he was just on there trying to look important. But as I said, it is concerning that triggered that much selling that day. I remember that day I took a lot of phone calls and text messages, everybody wanting to know what was going on, and first thing I always tell them is, I don't know. but I'm trying to find out. I heard rumors that day that we were shutting down a couple packing plants. I heard rumors that screwworm was already here. I heard a rumor that they were opening the border. And in the end, I typically don't like to spread those rumors because they were just rumors. It it just, like I said, it goes back to show everybody has a bigger voice now with social media, but they shouldn't all use it.
Yeah,
It is what it is.
definitely. So if the market is that fragile enough to drop down like that, based on social media rumors, like, do you think it's healthy?
Yeah, I mean that's concerning because what happens when we finally do get something confirmed like that? Are we
Mhm.
going to have multiple days where we are limit down and gapping lower like we did late last year? If in the event something actually happened with a packing plant or I whatever the reason is, that's you want to save your limit down days for stuff like that. You don't want to go limit down on a rumor because all of a sudden you're already at a lower starting point. So, yeah, it is very, very concerning that it's that fragile at these levels.
Yep. And the newsletter then too, I think you had mentioned too that it feels different than the last 3 to 5 years. And what's kind of changed there?
That was more related to demand, I would say. I spent a lot of time looking at the demand side of this picture because anybody and their brother can look at the supply and be bullish. At the end of the day, we need strong demand because the consumer's demand is what drives the packers' slaughter. So they're not going to ramp up slaughter unless the consumer's calling for more beef at today's prices. The last 3 to 5 years, as we've mentioned, we've talked about the domestic consumer has been the driver. It hasn't been the exports. There was a couple years, I believe 22, 23, exports were the driver. We sold a lot of beef overseas. It was super cheap and that was great. Cleaned us up out of that COVID backlog. But as you worked into late 23, 24, 20, and early 25, it was just full blown. I wouldn't throw 2025 in that. I think that was more just hoarding. I think, between wholesalers and retailers hoarding meat, and coming into a period where we were short on that, I think that was a big part of the demand picture. But if you come back to specifically 2023 and 2024 and early 25, those periods we saw the domestic consumer was the main driver. They came out with the U.S. per capita consumption is still hovering around that 58, 59 pounds of beef each year. I've been calling bullshit on that since COVID. So I think we're definitely well over 60. The math tells me we're over 60, so that's good and encouraging. But at the end of the day, we constantly got to pay attention. Are there changes happening? So we've seen those changes. When beef got stupid high this late last summer, like I said, some of that was hoarding. But the other side of it was, there was a shortage. The consumers were used to cheap beef. Then all of a sudden, fast forward a couple months as we came into the fall, which is typically not a strong month, time period for beef sales. All of a sudden, we saw the retailers gain on their margins. The price of boxed beef started falling back, and the retail prices stayed the same. What happened though? As I said, not a strong, September, October, not strong grilling months. The consumers started cutting back on those middles, on those steaks. So when I can look, like I said, everything comes down to price. I also got to look at the volume. So we started slowing down on volume we were selling at retail. Then we started seeing, the retailers shift the way they buy. They can buy meat on formulas like normal, or they can skip their formulas and go to the spot market if they're not thinking that meat's going to stay high. So what happened was the retailers saw that slowdown at the retail counter with steaks at record levels. So they started backing off of their formula orders and they started going to the spot market. You came into December, of course you're in Christmas ribeye season, so that propped that cutout up big time. Everybody went, I love hearing everybody buy prime rib for Christmas. It's the best Santa Claus present ever. So they came back for that. I was happy to see that. That was encouraging. But as I expected here in January, post-Christmas, that ribeye fell out of bed and the cutout fell with it. So, that ribeye was propping us up that month. Now the ribeye's pulled back. Now what's holding us up? Well, we've stabilized in the last couple of weeks, and most of that is on the chuck and the round. So the chuck and the round is typical roast, typical grind into burger if it's cheap enough. It's casserole season. Jan Feb is typically people stay in their house, they cook casseroles, and they pay off their credit cards. So here we are, we don't have the same demand we did last year. Like I said, price always matters. And when, retail, you go to retail and you buy a high choice or a prime ribeye steak, it's going to, $18 to $22, let's say. That's curbing some demand. That has slowed things down. So it'll be interesting as we come into March, April, and prime grilling season of May and June, what that demand is like. It just seems like there's a shift for the moment.
Yep. Yeah. Definitely casserole season right now. And yeah, you mentioned in the newsletter a couple days ago about those roasts and grinds too there. So kind of jumping back into the markets here too again. You kind of touched on this a little bit too, but everyone talks about the cattle supply shortage, and you've been kind of asking too in newsletters, can we continue the demand story? Can you walk through that a little bit?
Yeah, I mean, we've been saying since 2018, 2019 that the numbers were not what the USDA has been telling us, and I truly believe that. And yeah, there's been a shift from the dairy side where you're seeing, more cows got bred to beef, and that's made up for some numbers. We've been looking and watching this shortage of supply when it comes to the physical animal. But that's a story that every producer out there knows. We watch those fences get ripped out and that farm, that pasture get farmed. That's easy to see. We watch those feedlots, turn to tumbleweeds because nobody's filling them at these prices. That's a story we all know. But in order to have a true market, you have to have supply, and even if that supply is short, you still have to have demand at those prices. So, at the end of the day, as I keep saying, price matters. Are we going to see the packers stay profitable enough to keep prices at these levels? Well, that's contingent upon the consumer demand. Or if the consumer truly is pulling back even through grilling season, if they don't need those middles or those steaks, all of a sudden the packer's not going to be incentivized to be aggressive in the cash market buying cash fats. Well, if they're not aggressive there, does it matter how short we are on cattle? I've got a good customer who always said, when it comes to having too many cattle, all you need is one too many. And all of a sudden that changes your markets. He's got a point. Inevitably I'm a little concerned about the supply because they have slowed down that slaughter rate and they can back cattle up. I believe it's beginning a little bit, but if we get into grilling season and that demand is truly there, I think we could catch back up.
Mm-hmm. Yeah, so basically cattle are there, but they're just not making it to market, essentially.
Yeah, instead of feeding them for 150 or 160 days in these feed yards, which was normal, let's just say between 2018 to 2022. Now all of a sudden we're feeding them for 180 days or 100 or 200 days. Guys are willing to put extra pounds on, A, because they don't want to buy the replacement feeders at these prices, and B, one of the bigger drivers is the market's telling you to. When the price of fat cattle is $2.30 and your cost of gain is $1, every pound you put on them, you're making $1.30. Simple math, make them big. So, yeah, that's part of what's going on. So, and see, the third reason would be, if you have bought replacement feeders in the last 6 months, you've got really high break evens. So you need those cattle to get big in order to make them work. So inevitably, that affects our markets a little bit here and now, but it's long-term bearish if we continue down that path.
Mm-hmm. And then if demand doesn't match it, though, then that's when the problems really start.
Yeah, absolutely. When I make a critter bigger, it makes a steak bigger, right? So, instead of a couple needing two small steaks, they need one big steak and they'll split it, right? So that changes your demand as well. And at the end of the day, if we can make more pounds with less animals, that shifts our supply-demand outlook and whether we can be bullish or bearish from 230.
You recently talked about some of your personal cattle problems too in the newsletter, kind of touching on that 232 price. You mentioned that you ran projections on cattle that you recently sold at $232 and that haven't shipped yet, but they don't work with those projections. Can you walk through that a little bit?
Well, I'm glad you clarified which one of my problems I was talking about, because sometimes I talk about all of them and there's a lot. But yeah, long story short is I bought some cattle back in July. At that time, I believe I had projected to break it like 220 to 225, if I remember correctly. And yeah, I sold them for 232. Long story short, cost of gain ended up a little higher than I thought. Interest is a big reason. You could project what your interest, what your yardage, and what your cost of gain is going to be, but depending on how those cattle perform, that's a big deal. So inevitably, when you project them at 225 break even and they don't work at 232, that's a problem. So as we come into February, March, and April, it's the first time we will be selling cattle that have this high of break evens projected. When we were buying them August, September, October on that big run up, early last fall, there was a lot of people betting on the come, 240, 250, 260 break evens when they were buying those yearlings. Those cattle are going to be hitting the market here pretty soon. So I'm not going to be alone. There's going to be a lot of people that are going to find out that if this market doesn't rally, they're going to have some conversations with their lenders, unless they put on some really good hedges at the high back in October.
Mm-hmm. So the old ways would suggest to put more pounds on them, but that doesn't necessarily work here, right?
That's a great point because what did I see? We've got steer carcasses knocking on 1,000 pounds on national average, and you've got heifers, well over 900. Both are all-time record high weights for these cattle. So we're putting those extra pounds on right now, and we're doing that in our current, call it a stable market. We're not going into new highs, but we're doing that in a stable market, plain and simple. Historically, the cattle feeder puts a lot more weight on cattle when they don't work in a bear market because they use the extra weight to try and dollar their way out of a loss. So what are cattle going to look like? What are they going to weigh, when this market finally rolls over and starts trending lower? Our guys, instead of selling 1,600-pound steers, are they going to have to move to 17, 18? If they're selling 1,700-pounders now, are they going to have to go to 2,000 to make a steer work? Inevitably, like I mentioned earlier, the extra weight is typically considered bearish to the market because you're adding more pounds of production without the extra head space and you're backing cattle up.
Got it. So yeah, the traditional playbook of add more weight to dollar up doesn't really work when we're already at record weights then.
It's scary. It's absolutely scary. Yeah. If we need this market to bounce to new highs to make some of these cattle work and to keep our weights where they're at, maybe a touch lower. Got some winter weather coming in, so typically that can calm the weights down, calm the gains down, maybe shrink them, and you'll see the weights drop a little bit. But, yeah, that's the environment right now.
Yeah, since you just mentioned weather here, we'll transition to that. Depending on when this gets published, either this weekend or we just saw the big weather hit the southern half of the United States here. So there's, the winter storm coming. I think they're saying they love to put a number on stuff. So it's like 100 million people facing a major winter storm. Ice in Texas, cold temperatures. Is this what the cattle market needs?
To be honest, the old joke is I'm old enough to remember this and remember that. I'm old enough to remember when a southern blizzard or a winter storm like this going through the feeding region. I'm old enough to remember when that was really bullish for the cattle market. And it's not right now. I mean, we're in a sideways pattern right now. Maybe we'll see some really strong meat hoarding by the consumers and we'll need to restock shelves next week. But this should be giving the cattle market a pop. And so far this week, cash has been disappointing. There's still time for it to bounce, but it's been a little disappointing. Futures have been disappointing. Yeah. Not what you want to see out of the first really, really bad storm headed south.
Mm-hmm. Mm-hmm. We'll switch gears here now again to let's talk LRP here. Coming up here on Friday, well, I guess tomorrow or last week on Friday, the cattle on feed report comes out, and so LRP won't be available for purchase that day. But what should producers know with this report?
Oh, you should get it published today, Nick, so that they can all get coverage on tonight. No, I'm just, yeah. I mean, honestly, the expectations are coming in tilted bullish. You had an extra marketing day, so that's jacking up the marketings in December. Inevitably, if you take that extra day out of there, it's like 97% marketings. Placements are expected to be a little lower, closer to that 93%. certainly optimistic for that June market. And I think a big reason why June's been rallying as much as it has against Feb and the April. On feed, they're calling, just shy of 97% is the expectation. Inevitably, the USDA is going to come out with their guess tomorrow. And by Tuesday or Wednesday of next week, guess what? We're going to be back to trading cash, futures based on cash cattle. So overall, at this point in the cycle, I don't think I don't feel like this cattle on feed report is going to be a big driver of the market in either direction. In reality, I don't think any of them in the next year are going to be a driver unless they open up that Mexican border. Keep in mind with these reports going forward is, they're always compared to the same month last year. So we're comparing to December of 2024 with this report on December 2025. As we come into January, we're going to be comparing to January last year. Well, last year we shut down the Mexican border in December and January. Okay. So we're already comparing placements to lower placements last year. Then we opened the border back up February, shut it back down, I think late March, and opened it back up again, and then shut it down in the summer. When I look at this thing, I'm like, we need to be careful because all of a sudden we could start placing more cattle in one of these months coming up this year because it's going against a year like last year where we placed fewer. So, these reports, like I say, I'm not going to put a ton of stock into them because they're looking in the past so much. I think we need to be more conscientious of this cash market and the slaughter rate because that's inevitably the driver of this overall market.
Mm-hmm. And, the USDA reports, or at least these reports, just a week and a half ago, just spanked everyone sideways. And can anyone else handle another USDA report in the month of January?
I don't know if you're trying to push my buttons because you know my opinion on the USDA, but I wish.
I see those thumbs twirling right now, so.
Yeah. That keeps me from grinding my teeth.
Boiling right now.
Yeah, exactly. Inevitably, I wish we held the paddle and not the USDA because when it comes to spankings, we're the only ones getting them. So it's another report based on estimates, based on surveys, and based on people doing their job and people accurately reporting, which they never do. Like I said, I'm at the point I don't. If my phone wouldn't ring tomorrow, I wouldn't even look at that report. I wouldn't look at any of them if my phone wouldn't ring. So, thankfully my phone rings, and the market does like to trade it the first thing next week, on Monday, but inevitably they're all worthless in my opinion.
We'll stop there with the USDA report talk, but
good idea.
We'll talk about some more LRP here. For producers who've never used LRP or are on the fence about it, when does it make sense to jump into those LRP contracts?
Right now. Plain and simple. If I come back and say the same thing, everything's related to price. Price matters. You're just off your record high prices. We're nearly back to those. You've got 350, 360 on the feeder board, and our all-time high was 381. It's close enough. Get yourself covered. What happens if we don't go and exceed that new high? Now you've got a lower high on these charts and plenty of reason for this thing to sell off to new lows. Same on the fat cattle side. 230, 235 against the old high at 249. Get your butt covered. At the end of the day, to me, it's like covering $7, $8 corn. A couple years ago, we all should have been selling 25, 26, 27, 28 crop if we could have. And we could have, but we didn't. Get yourself covered. This might not have been the high, but it's going to feel a heck of a lot better having 230 covered with LRP if the market runs to $3 or $2. You can sleep at night. So it's a great way to start. If you haven't started by now, you've saved yourself a lot of premium over the last 4 or 5 years, but inevitably someday you're gonna pay some tuition if you don't learn to manage risk.
Yeah, speaking of risk, you guys Logic Ag customize tools and options and all sorts of things for each operation, especially for newcomers to risk management. What's the first conversation you have with someone that's new to LRP?
Yeah, so LRP, I'm always trying to learn about their operations. I love talking to people and learning about the way somebody feeds down in Texas or Missouri compared to up here in Iowa. Their calving windows, all that stuff, what works for them, what doesn't work. So that's always enjoyable for me. When it comes back to the LRP, it's pretty pretty simple. Where do we need to manage the risk? Where do we see risk in the future? Do we need to manage that risk? Every producer is different in their risk tolerance. Beyond the LRP, then we bring back and we start talking futures and options. And sometimes a futures contract or a put option or a call option, for a different reason makes more sense than an LRP. We're not here at Logic Ag, we're not your average insurance agents. If LRP is not the right tool for the right turn of cattle or for the right producer, we're going to talk through what that tool would be. A big thing for me is always basis management. If we're managing that basis risk, we're managing the futures risk, and we're managing the cash risk. You got to manage them all. It's there's lots of tools in the toolbox, and they all have their time.
Yeah, between yourself and then there's some South Dakota boys out there too. There's all sorts of experience too on the cattle side. I know you've got 300 head of cattle or so?
If my wife is listening, let's go with that number. If my banker's listening, yeah.
Regardless, you've got hands-on experience, and you guys got a good team to run ideas by and talk about different options and whatnot. So
yeah. At the end of the day, we're using these tools on our livestock. Yeah, out there in South Dakota, we've got a guy down in Missouri, have some people, in Kansas and a gal up in Wisconsin. They're all involved in grain and livestock production. It's awesome. I love to see it. They're not going to ask you to do something that they wouldn't be willing to do themselves. So I've got some cattle sold straight futures on the board. I've got some LRP'd. I've got other ones that are contracted, and I'm Mr. Anti-Packer Contract. So, like I said, we're gonna weigh all the options on each individual pen and see which one makes the most sense.
Just a couple quick hit questions, and the first answer that comes to your mind. If you had to sum up the cattle market in 3 words right now, what would they be?
Man, 3 words. Living on the edge. Sorry, that's 4 words. Living on the edge.
We'll jump into a ribeye question here. Best ribeye steak you've ever had? Was it somewhere special, or was it just over the grill at your house?
Well, the one that comes to, this is gonna sound crazy, but it was at a buddy's house. There were some beverages consumed, so it probably tasted better than it actually was. But it was pretty unbelievable. And but that one I believe got topped last week in Nashville. I had a ribeye cap, and that spinalis is phenomenal. That cap is always my favorite part. So yeah. you got to order just that, right? I know. So yeah, that was a pretty incredible steak as well. So it's had a lot of good ones. Only had a couple bad ones.
Is there if there's a producer who's upside down on cattle right now, what's one piece of advice you'd give to them?
That's a great question that I get asked a lot, and it happens. It's more common than you think. I've always been a believer in selling into a higher market and buying into a lower market. So, as we look at this market, feeder prices are kind of stable at the moment compared to last week. They're not higher, they're not drastically lower. I'd probably save some ammo, wait for this market to drop, and then buy into some lower price cattle. Inevitably, you want to work your average down on these break evens, because it's not a one turn going to make or break you, and if it is, it's tough business and you're going to have a hard time. You got to look at your year on average, you got to look at the last several years on average, how you've done, you got to look at the last decade. If you've got one turn of cattle that you're upside down on right now, and I'm not a huge fan of hedging a loser, if you're in the camp it's going to go drastically lower, then you're just going to want to buy a put option or an LRP. You're not going to want to sell a loser. But just save some ammo, be ready to buy in the event that feeder cattle do get a touch softer here in the coming months.
Well, that wraps up our last segment here. So Dan, this was great. Thanks for being honest about the market and about your own cattle and your ribeye obsession, and We really appreciate you sharing your expertise here.
Yeah, hope it does some people good. Hope they have a great 2026, and hopefully we go into new highs and we never needed risk management. So I'm gonna do my part. I'm gonna eat all the ribeyes I can this year to help stabilize us and run us higher. But I'm just one man.
Yeah. If you're a cattle producer and you want help navigating this market, or if you just want to talk about livestock risk protection, reach out to Dan here and the team at Logic Ag Marketing. They've got advisors who can walk you through your options. And if you're not already getting the daily marketing newsletter, where Dan breaks down cattle and a variety of other insights every afternoon, you can go to logicag.com. And that's episode 5 of the Bushels and Beef podcast. Thanks for listening, and we'll see you next time. And hey, go eat a ribeye this weekend.